The only reason for making an investment and laying out money now is to get more money later on, right? That's what investing is all about. The cash flows aren't printed on a stock certificate. That's the job of the analyst, is to print out, change that stock certificate, which represents an interest in the business, and change that into a bond and say, this is what I think it's going to pay out in the future. If you buy Coca-Cola today, the company is selling for about $110 to $15 billion in the market. The question is, if you had 110 or 15 billion, the question is, would you lay it out today to get what the Coca-Cola company is going to deliver to you over the next 200 or 300 years? The discount rate doesn't make much difference as you get further out. And that is a question of how much cash they're going to give you. It isn't a question about how many analysts are going to recommend it or what the volume in the stock is or what the chart looks like or anything. It's a question of how much cash it's going to give you. That's the only reason. It's true if you're buying a farm. It's true if you're buying an apartment house. Any financial asset, oil in the ground, you're laying out cash now to get more cash back later on. And the question is how much are you going to get, when are you going to get it, and how sure are you? When I calculate intrinsic value of a business, when we buy businesses, and whether we're buying all of a business or a little piece of a business, I always think we're buying the whole business because that's my approach to it. I look at it and say, what will come out of this business and when? What you really like, of course, is them to be able to use the money they earn and earn higher returns on it as you go along. I mean, Berkshire has never distributed anything to its shareholders, but its ability to distribute goes up as the value of the businesses we own increases. We can compound it internally, but the real question is, Berkshire's selling for, we'll say, 105 or so billion now. What can we distribute from that 100? If you're going to buy the whole company for 105 billion now, can we distribute enough cash to you soon enough to make it sensible at present interest rates to lay out that cash now? And that's what it gets down to. And if you can't answer that question, you can't buy the stock. You can gamble in the stock if you want to, or your neighbors can buy it. But if you don't answer that question, and I can't answer that for internet companies, for example. There are a lot of companies, there are all kinds of companies I can't answer it for, but I just stay away from those.
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
Warren, what do you consider the most important quality for an investment manager?
It's a temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Because this is not a business where you take polls, it's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.
Warren, what do you do that's different than 90% of the money managers who are in the market?
Certainly most of the professional investors focus on what the stock is likely to do in the next year or two, and they have all kinds of arcane methods of approaching that, but they do not really think of themselves as owning a piece of a business. The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years. All the ticker tells me is the price. Yeah. And I can look at the price occasionally to see whether the price is outlandishly cheap or outlandishly high. But prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price, so that I'm not influenced by the price in establishing my valuation, and then look at the price later to see whether it's way out of line with what my value is.
How can you stay away from Wall Street?
Well, if I were on Wall Street, I'd probably be a lot poorer. You get overstimulated in Wall Street, and you hear lots of things, and you may shorten your focus, and a short focus is not conducive to long profits. And here I can just focus on what businesses are worth. And I don't need to be in Washington to figure out what the Washington Post newspaper is worth, and I don't need to be in New York to figure out what some other company is worth. It's simply an intellectual process. So the less static there is in that intellectual process, really the better off you are.
What is the intellectual process?
The intellectual process is defining your area of competence in valuing businesses, and then within that area of competence, finding whatever sells at the cheapest price in relation to value. And there are all kinds of things I'm not competent to value. but there are a few that I am competent to value.
Have you ever bought a technology company?
No, I really haven't.
In 30 years of investing, not one?
I haven't understood any of them.
So you haven't ever owned, for example, IBM?
Never owned IBM. Marvelous company. I mean, a sensational company, but I haven't owned IBM.
And so here is this technological revolution going on, and you're not going to be a participant.
Gone right past me.
Is that all right with you?
It's okay with me. I don't have to make money in every game. I mean, I don't know what cocoa beans are going to do. There are all kinds of things I don't know about. That may be too bad, but why should I know all about them? I haven't worked that hard on them.
Isn't that boring?
It would bore most people, and certainly boredom is a problem with most professional money managers. If they try to sit out an inning or two, not only do they get somewhat antsy, but their clients start yelling, "Swing, you bum," from the stands, and that's very tough for people to do.
Warren, your approach seems so simple. Why doesn't everybody do it?
Well, I think partly because it is so simple. That the academics, for example, focus on all kinds of variables. Partly because
by academics, you mean professors of finance?
The data's there.
In business school?
Sure, and the data's there. So they focus on whether if you buy stocks on Tuesday and sell them on Friday, you're better off, or if you buy them in election years and sell them in other years, you're better off, or if you buy small companies. There are all these variables because the data are there, and they've learned how to manipulate data. And as a friend of mine says, to a man with a hammer, everything looks like a nail. And once you have these skills, you just are dying to utilize them in some way, but they aren't important. If I were being asked to participate in a business opportunity, would it make any difference to me whether I bought it on a Tuesday or a Saturday or an election year or something? It's not what a businessman thinks about in buying businesses. So why think about it when buying stocks? Because stocks are just pieces of businesses.
Warren Buffett este unul dintre cei mai mari investitori ai tuturor timpurilor. Ascultând interviurile acestuia, personal cred că ai numai de învățat. Gândește-te mereu atunci când cumperi acțiuni la o companie, practic cumperi o parte din businessul acesteia și trebuie să înțelegi ce fel de business se află în spatele acestor acțiuni cumpărate. Riscul astfel va fi diminuat, la fel cum spune și Warren Buffett, principala regulă este aceea de a nu pierde bani pe care cu toții muncim din greu pentru a-i avea. De ce ai plăti 2000 de lei pentru ceva ce valorează 100 de lei, adică de 10 sau de 20 de ori valoarea reală? Atunci când cumperi ceva sub valoarea reală, ai cele mai mari șanse să ai succes și mai ales să nu pierzi bani. Dacă mașina mea valorează 5.000 de euro și ți-a spune că vreau să-mi dai pe ea 20.000 de euro pentru că peste 5 ani va valora 50.000 de euro, ai face acest târg? Evident că nu. Probabil ai bate palma cu mine dacă aș accepta 3.000 de euro, chiar dacă ea valorează 5.000. Același lucru se întâmplă și când vine vorba de acțiuni. Teoretic ai șanse ca mașina mea să valoreze o groază de bani peste 5 ani, dar foarte mici, pe când riscul să valoreze mai puțin este foarte mare. De ce? Pentru că ai plătit mult peste prețul ei real. Chiar dacă 90% din oameni fac asta, atunci când cumpără acțiuni, tu trebuie să fii special. Desprinde-te de turmă, pentru că, după cum spunea și Benjamin Graham, nu înseamnă că ai dreptate doar pentru că 1000 de oameni sunt de acord cu tine. Warren Buffett ar prefera să evalueze o companie fără a ști prețul acțiunilor acesteia, pentru a nu fi influențat și pentru a se focusa strict pe business. Este un mod de a investi plictisitor și greoi, însă a dat roade și cu acest mod au ajuns bogați și renumiți oameni precum Warren Buffett, Peter Lynch, Ray Dalio și alții. Depinde doar de tine ce alegi. Dacă acest clip te-a ajutat în vreun fel, dacă ai învățat chestii noi, nu pleca fără să lași un like pentru algoritm, să te abonezi canalului Reinvest și să activezi clopoțelul pentru a fi primul care află când postezi ceva nou. Eu am fost Claudiu și vă salut, ne vedem în curând. Aloha!